Hello traders, welcome to the weekly outlook and setups volume 311. Iliya here, and as always we're gonna jump into the markets, have a look what happened this week, what kind of setups we had, and most importantly try to throw some forecasts for the incoming week. We have a very big week ahead of us, so without further ado, let's check out the economic calendar and then jump to the charts. On Monday, we're starting with a bank holiday here, Italian bank holiday, and then nothing else. Of course, it's not a US bank holiday, so probably we can still look to trade. Then we have on Tuesday some Aussie news, JPY speech here. We have this weekly employment change, which is tentative again, so probably let's see if it's gonna get released. And then we have job openings, which is great. We're also going to have job openings for September. But then pretty much the massive highlight of this week and actually of this month, because we have seen that the market is getting a little bit choppy recently, it's going to be the Fed rate. Expecting again another 25-point cut. And what I want to talk about today is that the market has already priced that cut in, because we have seen the DXY really nicely decline over the past week. So it could be a case of buy the rumor, sell the news. So when actually the Fed rate comes in, when we actually hear what they have to say, I wouldn't be surprised if the DXY takes an opposing turn. And then on Thursday, some Aussie news. I see a lot of Aussie news this week. Swiss franc interest rate decision, unemployment claims for the US dollar. And then on Friday, we're ending up only with the GBP news. I will be trading as usual every single day. I show up every single day. However, on Wednesday, I will not be trading all day, so I'm just gonna be waiting for the Fed rate. So basically I'm gonna show up on Monday and Tuesday. Tuesday is not going to be amazing because it's gonna be the day before the Fed, and then of course Thursday and Friday are going to be tradable for me. So with that being said, let's check out the charts. Fanatics, I spent 1.5 months putting together the Fanatic Bootcamp that is designed to help you exit the break-even stage with just 2 simple tools and 6 hours of content. Now, if you have been loving how I analyze the market in the weekly outlook, if you have been loving how I trade and how I think about the market, this is really going to show you everything that I do for an extremely small price. So we're going to be working on your mindset first, fixing your mindset, your limiting beliefs, and exiting your emotional cycles. Then I'm going to be giving you the 2 tools that I use, only 2 tools, so you're going to actually know what I'm doing in these weekly outlooks. And then of course I'm going to give you the process and the mechanics for it so you can actually build it into a trading plan. So if you're interested, first link in the description, click on it, and I'm going to see you on the other side. All right, we're gonna get started with the DXY just real quick. Having a losing week, very small losing week. This is just a futures loss, so I only took 1 trade on ES on Wednesday that hit stop loss. Then there was a win that I could have taken, and then there is a break even. I think this is not even a trade. I think I did some to keep a funded account live or something. But yeah, so very choppy week for me because I trade only gold right now, and yes, gold was absolutely chopped up. There were some nice opportunities, by the way, on EU and GU. I will try from next year to add a little bit of EU and GU into my watch list, but I wanted to spend this year pretty much mastering gold, which turned out pretty nicely. So having a look at the DXY again, we can see that recently we're starting to decline, and we attacked this outlined liquidity that we had pretty much that I outlined last week. And of course I gave you the scenarios. We always have a bullish scenario and a bearish scenario. The market did create that fourly bearish imbalance on Friday, and then yeah, just on the opening here we consolidate a little bit, and then we just flush to take the first 2 liquidity points that I have outlined. We just stopped very briefly of that one, and then we pull back. We made a daily imbalance, I believe. The daily imbalance was actually on EU. Did we have a daily here? We didn't have daily at that time, right? Then it consolidated a little bit on Tuesday, and then it flushed towards the ultimate liquidity. So yeah, you can see we're having a lot of selling pressure, a lot of sell structure as well. And on the weekly time frame right now, we're taking a very important liquidity point. We're kind of looking like it's sweeping it right now, not a very clear closure below. Looking into the weekly time frame, we don't have anything to target below. So I look at swing points. That is the only swing point that we just took. And then basically, if I go to the daily time frame, I have to start refining to the more recent swing point, which is going to be daily swing point, and then the next one is going to be all the way down there. So Fed rate is incoming. Are we going to start rolling? Again, essentially a cut is bearish for the underlying currency, so we should be expecting short sales. However, I have seen a lot of times in the recent markets, we're having a lot of this buy the rumor, sell the news. The news gets released and the market just absolutely rockets because the Fed actually shows up, Jerome Powell shows up, and he is, let's say, a little bit more hawkish on the economy. And this is actually what is going to move price essentially. So be very careful and wait for that Wednesday to hear what Powell will say. Now, we do have a very nice daily bearish imbalance signifying bearish momentum. This daily low here can be a potential target. And of course, this daily also low can be the shorter term target. So again, currently we're definitely in a sell structure, looking for sells overall. However, I would be very careful and pretty much waiting for that Wednesday to come out and then really to start building up a bias. As I keep telling you in every outlook, the best thing that you can do is just wait for the first full-hourly bearish or bullish imbalances to print, and then you literally flow with the market. Okay, last week pretty much, last week was tricky because the market sold off and it took these two liquidity points that I have outlined, and then it had this bearish, but it failed it. Then it had this bullish and it also failed it. So you have to be really into the flow here and to really start seeing the market flushing so you can capitalize on this Wednesday flush. There was beautiful trades on GU. So yeah, right now we tapped into this daily zone. I mean, we can already start making our way lower into this liquidity point. Now this is going to be the low hanging fruit, very close. Definitely, if you drop to the 1H, to the 4H, if the market starts guiding you lower, this one can here definitely be the liquidity. We are very nicely trending down on the quality time frame, but you always have to be aware of where is the market going. Now, as we were trending lower right there, this was the target first. All right, why? Well, because that was a weekly push that failed to follow through, so then it became liquidity. Okay, so right now, where are we heading? We can be heading potentially towards that low. Okay, so always step by step, we go from liquidity to liquidity, from liquidity to liquidity. So if we, of course, right now break very strongly above this reaction point here with a quality bullish imbalance, there could be potential longs. And of course, then where the market, where it's going to be going is towards this liquidity point. Now, as we get towards that liquidity point, there are going to be a lot of resistance areas. You always have to mark them. There is an unmitigated imbalance here and a little imbalance here. And of course, you have this order block. So there's going to be a lot of resistance here, but the market can come in, react, break, and then we can head for that buy side liquidity. Okay, so this is my overall outlook again on the DXY. I'm not having a very precise bias. I'm definitely more bearish. I do have my targets as always. So let's see how the other pairs are looking like and if they're going to give us a little bit more clue about what could be happening next. All right, let's check out Euro USD. Yeah, here pretty much again, always giving you the two scenarios, bearish and bullish, but in this case we were more bullish. The market taps into that forward imbalance exactly on market open, which was great, and then it just pushed liquidity number 1 taken, liquidity number 2 taken, and then ultimately our liquidity number 3 got taken as well. Again, as I told you, wait, there is the forward imbalance that I had marked to happen. It did happen. Then we spent a little bit time consolidating here, but I do remember there was a daily imbalance here. No, there was not. The daily imbalance actually formed on Thursday coming into Friday. But yes, we did attack a lot of liquidity points. So this right now is the main one that is taken. That is it's not a weekly swing point, but a very important daily one. And pretty much if you look at the next one, it's all the way up here. So very far away, very far away. Structure is starting to turn a little bit bullish now. Definitely this gives me more signs of bullishness on the EU and of course bearishness on the DXY. Now what you see happening here was lower high, low, higher low, right? So that is kind of a triangle formation, and then we have to wait to see where price is going to break out. And then we created the higher high here, which confirms this higher low. So this is bullish structure, and then this potentially can be the next target if the Fed rate comes into this week and pretty much pushes price. Now on the forward time frame here, it was a nice trading on Tuesday and Wednesday, pretty much. And then we came in on Friday, taps into daily, tried to push, but then it came in and it swept the reaction. So currently in terms of hourly zones, we don't have anything. We don't have bearish, we don't have bullish. We have this daily imbalance that tapped, which is great, but so far we're not getting signs that it wants to hold. Now, if this daily zone fails, we're going to be going towards this liquidity point, which is not the daily origin, because the daily origin is all the way down there, but this is way too far away. So when it's too far away, I usually refine it to a lower time frame, which is going to be this. So if we start trading lower on the quality time frame, bearish imbalances, of course, here below the EMA, preferably, that can show us bearishness, and then we can target this weak low. All right. However, we're still tapping into this daily. So if, of course, we start getting 1 hourly bullish, 4 hourly bullish, and really giving us signs that we potentially want to go up, then we can definitely keep looking for longs and target this high. So that's pretty much it. Like, I'm even thinking honestly to kind of change my strategy around these weekly outlooks, because how I trade changed a lot this year, especially, and basically I no longer make forecasts for myself. I just show up and I trade. So not sure how to tackle it, because right now, like, there is not much. I do feel like a lot of the negative comments as well, like, so basically it can go up and down. Well, yeah, you can also do this by yourself, right? So yeah, we'll see what I do. Maybe I'm gonna figure something out for next year to do, like, maybe, I don't know, maybe I'm just gonna do trade recaps. We'll see. But yeah, because basically what I can say right now, like, I don't know if it's gonna go up. I can say, okay, it is going to go higher, but this is not how I think about the market anymore, because if this daily imbalance fails right now and truly shows me signs of failure, body break below this reaction, following bearish imbalances, breaking and retesting the EMA, I'm just gonna be going short. But if we start popping higher, breaking structure on the 1 hourly, printing 1 hourly bullish imbalances and 4 hourly bullish imbalances, I'm going to the high. That's it. That's all I can say right now. So that is EU. So GU was very tricky at the beginning, very tricky. Like you can see here, we outlined this liquidity target, the market opened and it popped that liquidity target, and then it actually started giving us a little bit of a sell signal. So there was a little short trade here. It tried to push lower, but then it started finding support at the EMA, and you can see we didn't really have follow through lower. Like, it tapped here, but then it started wicking. It didn't really start trending lower, breaking and retesting. So this is something that I want to see on EU if it's gonna go short, like breaking clearly below the EMA, retesting with an imbalance, and then to potentially go down. We didn't really have that here in order for me to target this low, right? And then, oops. And then pretty much, yeah, it started absolutely rallying higher. It's just destroyed that daily reaction area, and it went into our ultimate liquidity target here that we drew last week. We did a massive case study on this one during my Thursday webinar with the community. There were some incredible setups right here on Wednesday. Like, Wednesday was the day. That's it. So what are we going to be doing right now? We're having a daily bullish imbalance that the market tapped in on Friday. Actually, there was a nice stop loss on Friday that a member of my community took. It was definitely textbook, but the market already pushed, took liquidity, so he didn't really want to follow up on Friday. This is going to be very low-hanging fruit liquidity, this daily swing point. And then above that, we have this daily reaction area that didn't get tapped. Maybe on another broker it did. And then, of course, above that, we already have the daily swing point. So those are kind of more ultimate targets. And then, of course, to the downside, we have this daily low. Now, when is this daily low going to get tapped? If this daily bullish imbalance fails. How do we know if it's going to fail? If the market starts printing bearish structure and bearish order flow inside it. Why I think we could potentially have some downside is because usually when you see massive one-sided moves like that, the market does tend to go and rebalance them. Because if you probably plot a volume profile here, there is a lot of empty space here in one-sided order. So you can see it right here. It's not very clearly seen, but there is only one-sided pressure exactly right here, which is where overall this this 4-hourly bullish imbalance is, right? So are we gonna come to fill all of that thing? Let's see, because I wouldn't like a lot of shorts because we're trading against that massive bullish trend. We're trading against the daily bullish EMA right now. The daily EMA tapped, reacted, and broke. So that definitely gives me a lot of bullishness. Higher low was formed. So can we start attacking all of these highs? Definitely. But first, let's really wait to see what the Fed are going to say. And that is definitely going to give us the bias. Now, again, you can see what can you say about this price action? A lot of you can have, of course, different strategy. You might say, okay, I'm looking for the flip, like pull back 50, 61, I'm going to long. All right. Well, I don't trade anymore like that. Like for me, this daily zone got tapped. It tried to push, it failed. Now, when you see that it's failing to push up, it's going to attack the liquidity. That is taken. So what is happening right now? We don't have bearish zones. We don't have bullish zones. We're already tapped into this one. We have, of course, below us all of these what I call reaction areas. So not necessarily I'm going to be looking to long from these areas, but basically, yeah, so many things can happen. We can just start up and start going higher. If we do that, liquidity number one, this high, and then of course tapping into the daily reaction area. If we start trending lower, I truly want to see if we're going to print bearish imbalances, because if we do that, this is going to give me signs that this daily bullish zone is failing. However, then the sells are going to be hard and they're going to be tedious because there is a lot of support. We're going to have EMA support and these two hourly bullish imbalances support. We're going to have this break and retest here of that zone of support. It's going to be tough. So I would definitely prefer longs a lot more. So yeah, long setups, of course, like it can happen like this. It comes to sweep and then it starts printing higher. Hourly bullish, that definitely can be the setup. So again, everybody, like, yeah, the game is to just flow. That's it. That's my biggest pretty much learning for this year. Since I stopped forecasting. I just started showing up without zero cares about the market and like the direction. My trading just got so much better and so much more calmer. So that's GU, right? Overall bullish bias, as I'm more bullish bias on EU as well, but we really have to see how it's gonna play out. And as usual, I'm just waiting for the first forward imbalances to form and then I flow with the market. All right, sometimes these Aussie and NZD pairs, like they have some sort of a pattern within them. I believe it's a macroeconomic pattern of some sort. They chop for an eternity, but then there is a period where they just go linear, right? So here again, we had that very recent hourly bullish imbalance. The market tapped it. It tries to push, but then it consolidates a little bit, consolidates, and really started getting like the signs of bullishness from here. But we didn't really get a hourly bullish imbalance tap. Like it was just very slowly climbing higher without any imbalances. And then it printed another one here and never tapped it. So probably there were some sort of long setups on the 1 hourly time frame here, but I don't trade this pair at all. So I am probably going to start specializing a little bit more on GU, I believe, because I find GU is the best because it has a lot less correlation to the DXY, but it's still affected by EU and the DXY, which sucks. So Aussie dollar taking this massive weekly liquidity right now, massive weekly candle. Okay, so next target, are we gonna go all the way up here? Definitely possible. On the daily time frame, it's definitely starting to impulse. Like you can see this thing, I really don't like this thing. It has massive periods of chops, and then suddenly, all right, let's go, and it just decides to go. Daily bullish imbalance here below us, but the market is running away from it. But still, it can come in inside. Can we form a daily bullish imbalance on Monday? That can potentially be nice. And in the meantime, can we continue from something else? We can continue from this voyage zone and of course this voyage zone here. So pullback here, continuation, scenario number one. Daily bullish imbalance to be created on a Monday and then traded on Tuesday, scenario number two, which is also going to look like that. Tap, react, break, trade towards the daily and liquidity right here. So these are the two scenarios. Pullback, holding from 4-hourly bullish or daily bullish if it forms on Monday. Go long. Target, of course, recent highs. You can try to find something here. Let's say there is a swing point right there just to get a little bit of... I always like getting more low-hanging fruits because I wouldn't really target that high. I would try to target very, very recent zones. So yeah, pullback, higher low, continuation higher. It can also just pop higher. If it does that, if it prints forward bullish, follow it. So that is Aussie dollar. Like all the major pairs are giving me long bias right now, which kind of really builds upon the idea that DXY is short, but it is short. It's already happened. So the Fed can come in and say something really positive, and then the dollar might just rocket. So be very careful this week. And if you're also trading Aussies, I saw that there were a lot of news, so make sure to watch out for them. NZUSD, not a bad development, just a little bit trickier than Aussie dollar. Aussie dollar just went ballistic higher. This one, again, you can see how different they are. They're like EU and GU. They're so similar, but they're also at the same time different. Now, this one taps into reaction area, kind of consolidates. Now, I did outline this liquidity target that never got reached. Honestly here, that was a nice short because you see, okay, taps into reaction area, fails to follow through higher, attacks the liquidity here, great 4-hourly bearish imbalance, taps in, tries to push, but then it rejects. So maybe you take a win or a stop loss here. And then as it fails to really go lower towards that liquidity point and it invalidated the new imbalance, then guess what? It's going to the opposing side of the liquidity, right? But it's all about the flow, right? I cannot say this as I'm doing the analysis right now, okay? I can say that this is definitely a short trade here. Tries to push down, immediately fails. And as it fails, there is nothing anymore to push price lower. This 4-hourly zone failed, it's gone. There is nothing else. There is no daily bearish, there is no 4-hourly bearish. I wouldn't go to the 1H because I only stay on the time frame that I'm currently at. And then goes attack the liquidity. After liquidity gets taken, what happens? Another 4-hourly bullish. What does that tell us? Order flow is bullish. We go higher, and then again here, this one was really choppy. So yeah, that's basically how it goes. So again, we have to just show up right now and flow. Now, I really do like this daily bullish imbalance that already got tapped and already went. Yeah, okay, so this one is already done its job. So this one doesn't exist anymore. Why? Because it tapped and it took liquidity. That's it. That's the job of the imbalance. Job done. Right now, what is left is the liquidity under the imbalance. So what I believe in is that, for example, if you're trading these imbalances, a lot of you are going to keep that imbalance and they're going to say, okay, it's going to come in right now to retest the 50%. Definitely it could be, but I don't believe that. I believe that it's going to take this liquidity and then potentially reverse from there. Not necessarily from the imbalance. It might come to take out also this this OB here and this liquidity, and that is going to give you the support. So something like that for a long setup could be nice. Expansion higher for a long setup, and then of course if nothing truly forms, if we take out this low and we sweep it in reverse, then definitely that is going to be a long setup. But if we continue below it with 4-hourly bearish imbalances, then that is going to be the short setup, and then we target this liquidity. There it is, right? But again, we don't know how it's gonna form and what it's gonna do. So this is why kind of, as I mentioned even in real, I'm kind of losing a little bit motivation to do these outlooks because my trading again changed a lot, and I don't do the forecasts that I used to do before. So maybe from next year I'll stop and I'll figure out some other type of content. So yeah, this is XAUUSD. Let's see, right? It's bullish, but how it's gonna play out, we don't know. All right, so gold extreme chop this week, very big chop. Now, I expected a daily bullish imbalance to form, which it did. So if I delete all the lines, because yeah, this is kind of the scenario that we're looking at. The market opened up, it took some liquidity, as I outlined, and then it pulled back into the daily imbalance that I drew here on Sunday, which actually formed, right? But then it started chopping like crazy. So let me delete everything and pretty much do a fresh analysis. So yes, we did create a daily imbalance here, and we pull back into it, and it was looking like longs, but then again, you can see chop day, chop day, chop day. So it is really compressing right now, and it is cooking for something. When gold compresses like this, it is absolutely cooking for something, and I think it's just cooking for the Fed rate. That's it. Liquidity on top, liquidity on the bottom, nothing is being taken, no 4-hourly imbalances whatsoever, nothing to the downside, nothing to the upside, chop, 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 chop. EMA is bullish, but it's not following through. We had a 4-hourly bullish imbalance here, took liquidity, and right now at the closure, we're having this bearish imbalance here coming back into the EMA. Like, this to me is just nonsense, and this is why I didn't take any trades this week on gold, because, like, it was just nonsense, like up and down and up and down, and just it looks goes up, it goes down, then it goes down, goes up, goes up, goes down. This is not a market that I trade, and I am extremely good at recognizing low quality markets, so I just step aside. And I've had times at which I don't take a trade for 2 weeks because I'm protective, I don't trade these choppy markets, but then when it gets good, that is when I make money. And then of course I can get judged like, this guy doesn't trade, this guy doesn't trade, doesn't take any trades. Well, sure, but if I can take like 4 good trades a month and make 5 to 6%, I'm gonna be a lot better than the rest that are trading every single day. And they might look like initially they're making money, but then eventually they're just gonna blow out in these type of conditions. So that's gold. Like, I have no idea this guy what it's doing. It's really starting to squeeze for something big. This is what I know. Now we have this forwardly bearish imbalance that was left on Friday. Do I want to trust that? No, because right now the market is going to tap into the forward EMA, and this EMA has been testing right now for a while. The more times a support gets tested, the weaker it becomes. And I would just once again wait for the quality time frame to really show me what it wants to do. Now again, this is gonna tap, react, come here, and then give me shorts. Good. Is it going to impose lower immediately? And if I start seeing closures below the EMA with bearish imbalances, I would definitely look for shorts. And then of course the long scenario will be tap into that 4H, react, break with a bullish, and then we go higher. So again, like when it's in the consolidation, we just don't know. It is going to do something, but is it going to go down? Is it going to go up? Like there is a... Oh shit, I just missed something extremely important because I started from the lower time frames. We're having a weekly imbalance. We're having a weekly imbalance. So that is going to be a great target. So this daily is not relevant anymore. Let's see. Now, as we have set up this weekly imbalance right now, I really think then this is looking like a really juicy area for us to pull back into. So let's see. If it guides us lower, I take a short into the weekly. And then as we collect some of that liquidity into the weekly imbalance, then if we start flipping bullish, I'm going to be on the longs as well. So that is gold, okay? Monitor. So this zone is gone. Monitor this weekly imbalance, monitor these recent liquidity points here, and monitor how it's gonna get there, because you can have an opportunity into the zone and then an opportunity out of the zone. But I do believe, like again, that Wednesday the Fed rate is really going to decide what happens next, so be careful and wait for that. UJ, not a bad performance this week. So we had outlined this weekly bullish imbalance and we kind of looked to target it, and the first thing that the market did literally when it opened, it just whoop. It took all the liquidity that we outlined, which kind of sucks because you had to be really fast on Monday to try to catch that short move, like really fast. And then pretty much taps into the weekly bullish zone, takes liquidity number 1 and takes liquidity number 2. Like when I see this, I potentially know, all right, we are probably due for a bigger pullback, which is exactly what happened. We created a pretty big pullback and there was no daily bearish imbalance in that case, which made it pretty tricky, because then you kind of start getting a little bit that whipsaw move. Like you have a massive move down and then a massive move up, and then you kind of maybe want to try to trade from that bearish, but then it fails, and then you kind of have some bullishness, but they don't get tapped. And when they get tapped, then the market makes you actually discuss this, how this is a beautiful lower high, how positioning really matters. Is that again, you say, okay, we tapped here, took liquidity, and right now we're gonna go up. But no, zoom out a little bit, see that we're still trending lower, lower high, lower high, lower high, until we pull back, make a higher low and a higher high. That is when the trend is confirmed. So for example, if you try to long from here, that is not a great trade. Exactly at the EMA, which is the overall average price, and into a lower high. And then we started selling off again, but again, you can see no forward imbalances. So you really have to be down on the lower time frames. There was one right here that tapped and reacted, so that was nice. But anyway, kind of still looking like we're in this weekly zone, because on the weekly time frame, this is still candle 1, so the second candle can turn. We came in, reacted, and we came in again. We just swept these lows. This is tricky. No daily imbalances whatsoever. This is going to be the lower targets if we go down towards the daily EMA as well. Bullish target is going to be this one, is going to be a low hanging fruit. Forward time frame, again, like let it make a higher high first. So we made lower highs, lower highs, lower highs, and right now, boom, we have a forward imbalance, let's go up. And then you're like, boom, it goes down. Why? Well, because we're just still trending lower until we kind of really break and retest the EMA. I wouldn't say that we are fully, for example, long bias. Like in this case, like, okay, it's going to go down, but it's tapped the EMA, it's still like bullish overall. It reacts, right? Tries again, reacts, and tries again, but then until we finally broke it, that is when we kind of really went short, but we went short really hard in this case. So bullish scenario will be something like that. I really want to see the market emerging above the EMA with a forward zone here, and that is going to be the best setup. If not, let's say the market can just decide that it wants to flush, invalidate this forward imbalance. And basically a lot of my trading plan also comes from failures of imbalances, because again, like I do not forecast is it gonna hold from that imbalance or not. I don't know. I'm just gonna show up and see, okay, if it doesn't hold, then I know what to target. If it holds, I also know what to target. That's basically it. So yeah, that's it right now. The long scenario, I would like to see a break and retest of the EMA with a hourly bullish imbalance here. For the bearish one, I need to see a failure of this hourly, and then I can drop to 1H in 50 minutes to try to guide it into low hanging fruit down there. And then basically, yeah, the next low is definitely that one. So if it continues to trend lower, now how is it gonna trade lower? Like, is it gonna make a big pullback and then flush? Is it gonna be just straight lower? We don't know this. But overall, again, I am biasless here. DXY, again, we know it's a little bit more short bias, so that can definitely influence this. Recently, we have been definitely bearish on 4H. However, daily can be forming right now a kind of a macro higher low formation. But I do feel like this low here is looking very juicy because I see that this push here is not doing anything. The market has been pulling back for ages. It's not doing anything, so I feel like we might want to squeeze a little bit to the downside towards this liquidity and the EMA, and then maybe go from there. So let's see what happens. All right, welcome to the indices part. So this week, I mean, we reached my liquidity objectives. However, we reached them in the absolute shittiest manner ever. So we did have a daily imbalance. The market tapped into that daily imbalance. Great. But then look at the hourly time frame, like absolute chop this week. So I did take a loss in one of the days that actually gave me a setup according to my trading plan, but extremely flat, and we kind of reached that objective in the very last time on Friday. So weekly time frame, we invalidated the weekly imbalance. We did, right? Yeah. I mean, it could be an it's like an extremely small one, but I'm not even gonna draw it. Very small weekly candle. I think it's cooking for something. We tapped into that daily imbalance. Okay, tapped in, then day 1, 2, 3, 4, 5, not doing much, right? It took the market 2 days to take this liquidity only. Chopped on Thursday as well, and on Friday took this one out. This liquidity doesn't, this imbalance doesn't exist anymore. Now we have this liquidity, and under that low, we have this daily zone with the EMA. Again, everybody, like, what is it going to do? I've got absolutely no idea. So I'm going to be showing up every single day at 10 a.m. I'm going to be looking for my strategy. And if I get a setup, good. If not, I just don't trade. So again, as you saw in my performance, I only took one loss this week on all of that chop. That's it. We tapped into that 4H, drove into the daily, reacted. So right now, again, if we start getting guidance lower, all of these amazing lows are going to become liquidity. Like, they're so choppy that the move down can be extremely fast. So if I start getting signs of bearishness, we're going to encounter the EMA, which is pretty bullish. But I do think all of this flat price action can potentially be taken for a little bit of a squeeze and then pull back into something on a higher time frame and then maybe go up. We're getting very close to all-time highs though, which is also very tricky. So if we also pop higher and we really, let's say, start closing above the structural level here, and then with the hourly bullish imbalances and everything that we need to see, all-time highs are pretty close. We might go and take them. So let's see. It has a lot of things that I don't like. Like, I really like the bullish structure, bullish EMA, everything is bullish. So this really gives me a very nice long bias. But I really don't like how this week performed so far. And it kind of makes me think that we might want to squeeze all of these lows, right? Because when they're flat, then boom, something massive happens, right? Be careful, but of course, show up every single day, look for the setups, and we just carry on. Nasdaq pretty much the same, tapped into that daily, reacted actually, so not a bad trade from here. And Nasdaq was a little bit better structurally. It kind of moved a little bit nicer, and it still ended up fulfilling the ultimate target. Now, this one also doesn't have a weekly bullish imbalance, which is all right. We're also heading very close to all-time highs right now, which is interesting. Before all-time highs, yeah, we don't really have any clear swing points. This one got taken. Do we have a daily imbalance? No, we only had that guy which tapped and went. Taking liquidity right now on Friday. This volume imbalance is already tested and did its job to take the liquidity. So what we have left right now is just all of this massive sell side. Like, if this decides to slide, it's gonna slide very hard. Yeah, so then of course you can drop some of these older liquidity points that we can be looking for next. Then of course you're gonna have this hourly reaction area, not 5H, and then we have this guy. Oh, come on, what am I clicking there? So these are all the upside targets right now. And again, how you would tackle this one is you're just gonna wait, right? If it really starts popping above with volatile bullish imbalances, closing above these liquidity points, I'm definitely looking for longs. However, if it really starts sliding lower, closing below, we can start taking a lot of these liquidity points. Now, what I don't like is that we don't have anything to retest. Like, there is no weekly imbalance, there is no daily imbalance. So if it decides to take that liquidity, where is it going? Like, that's the problem. This is like this daily zone, and then these small daily imbalances here that got left. This is maybe where it might want to go to rebalance a little bit, but I don't know. Usually it would be nice to have a weekly zone to pull back into, but we don't have that yet. And I believe that we already made the flush. We took that weekly liquidity. We failed to follow through lower. So right now the opposing side is all-time highs. So I'm definitely also very bullish. And yeah, I'm just going to be showing up every single day, looking for the setups. If we really start guiding higher, then all-time highs can be incoming. If potentially the dollar starts flushing, very likely maybe the stocks are going to go up, because money is going to start flowing more into equity. So very interesting to see what's going to happen next week. And US30, exactly the same. Pulls back into the daily imbalance, follows through. So yeah, not a bad trade idea. Overall, that was our outlook from last week. Now we're taking pretty much everything. We are left with all-time highs. This daily reactionary is taken. We're going higher. This actually has a daily bullish imbalance, which is definitely not bad. Daily bullish imbalance. There is nothing on the 4H. You're just grabbing some liquidity points here. All right. And then immediately as we pop this liquidity, there is nothing else to follow through from. We go for this one. And then the next one is going to be the daily imbalance. So I can say a trade like that is going to be very nice. Okay. And then of course we can just continue towards all-time highs. It is likely that we maybe pop all-time highs this week, especially like if the news are very big. But yeah, so for example, this daily imbalance here is really nice, something that we don't have on Nasdaq or ES. So if we tap right here, if you start getting the long entry models, great. But if we fail that daily imbalance, then it might want to pop this low as well. So always be aware of all outcomes. So as a quick recap, we're having the Fed rate this week. The market is very likely going to be waiting for Wednesday, so make sure to be really focused and also awaiting this. The DXY is overall bearish across the board because we're having, for example, pairs like EU with a very bullish structure, GU with an extremely bullish structure as well. So we can definitely continue looking for longs on these pairs as long as they take some liquidity and then potentially start giving us bullish signs. Aussie dollar and NZD dollar also heavily bullish. We can be looking for continuations once again, provided we have the continuation zones. Gold is an absolute crap right now. It has been a very big crap for me personally. My last kind of trade I took was on the 21st of November. And then since then, I just didn't manage to take any trades on it. There were some days at which it just pops, right? And then it just starts sleeping like crazy. So not amazing performance, but again, I believe it's not me, but it's probably more the market that is choppy, but I'm not losing anything, of course. Looking to see a tap into that weekly imbalance, and then maybe from there to have a reversal. USD JPY definitely has been very bearish in the most recent structure. This low here is a weak low for now because the market doesn't seem like it wants to go higher from this weekly imbalance and from the daily bullish imbalances we had. Currently, we have a little bit of a short-term kind of a quality bullish, but it can just be a little bit of a liquidity grab to take some of these liquidity and then to potentially go down as well. So be very careful. And indices, they were pretty slow and kind of choppy this week, but they're all getting very close to all-time highs. So the closer we get to all-time highs, the higher the likelihood of the all-time highs being taken. However, I do believe like the big move is going to come in on Wednesday with the Fed, so make sure to be watching out for that and just wait for it to get released. And then my advice is going to be to trade on Thursday and Friday. So that is from everybody. Let me know how you performed this week. Let me know what kind of setups you're looking for into the next one. And yeah, any questions, leave them in the comments. I'm always there to answer.